Hi, everyone. Thanks for joining. We'll start in about 2 minutes. We'll let folks trickle in.
Do we have to be quiet while this happens, Ryan, or can we, like, I'm excited that people are coming in. This is going to be a great time. I'm looking forward to this discussion.
Yeah, and it's funny to see on the screen, Sue, given that we were just in the same place like 24 hours ago. So now we're back at our desk in the Zoom world.
Exactly.
Yeah.
Back to GoToMeeting, but you know what? That's okay. It was a little bit of a shocker, I have to admit, coming home from Vegas, and I looked out the window of the plane and I see snow everywhere. Coming back to Minneapolis. Oof.
I've got a few inches in my yard in Colorado as well.
Yes. It's not winter is coming, winter is here.
Winter is definitely here too. Well, looks like we have quite a few folks on the line, so we're going to go ahead and get started. Thank you so much to everyone for joining. My name is Ryan Pacchini. I'm the host of the Expert Solutions webinar series. The title of our session today is Create Rock Solid Relationships with Loan Officers. I'm the head of our go-to-market strategy. I'm joined by the one and only Sue Woodard. Sue is infamous within the mortgage industry as a thought leader on so many different topics, and we're just thrilled that you're with us here today, Sue. So thanks for hopping on. Good to see you on GoToMeeting after seeing you in person the last few days.
Indeed, it's great to be here. Great topic, and I'm really looking forward to this, Ryan.
Great. So we'll go ahead and get started. Before I do, folks on the line know that this webinar will be recorded. You will get sent a link afterwards. If you have questions throughout the webinar, please put them in the chat. We'd be more than happy to answer them throughout. We may not be able to get to all the questions today, but if we don't, we promise that we will follow up with you and get you the answers that you need. We will also leave some time for Q&A at the end. But with that, let's go ahead and get started. So a quick agenda. First, we wanted to level set on what the LO talent pool looks like today. Then we'll talk through the mindset of an LO, a blueprint to retain top LOs, and strategies to recruit top LOs. So hopefully this will give you a good lay of the land as well as some strategies moving forward and some key takeaways to build those great relationships with the lifeblood of your business, loan officers. So with that said, Sue, let's go ahead and get started. You know, as the market continues to evolve, I think our listeners would really benefit from just understanding the current state of the LO talent pool. What does it look like? How many folks are within the talent pool? What is the profile of most of those folks? So maybe you can start with just some of the basics. How many LOs are there today within the industry?
Yeah, let's talk about it. And I have to give credit where credit is due. The data that I'm going to share with you today is from our friends at Ingenious. And I also talked to some of the great folks over at Model Match who gave me some intelligence as well. So they're on the front lines with data and also some of the recruiting happening out there. So I've got to give them some credit. But let's talk about, you know, how many people are in the mortgage industry? How many loan officers are in the mortgage industry? As we know, it's a moving target from day to day. And sometimes, you know, as you're looking at the headlines, there's a lot of questions about how many originators are out there. So some of the data that I got from Ingenious, you know, if you looked back in, you know, 2019, when you think about, there was a total of about 263,000 loan officers at that time, but doing 3 or more loans per year was about 180,000. You know, fast forward a couple of years, it really started to ramp up, of course, during 2020, and then 2021, we hit a bit of a peak where the total loan officer count was 353,000. But again, when you kind of take the ones who are doing 3 or more loans, or the ones who are really actually active at any level in the business, is about 234,000 last year in 2021. Now, as we get to 2022, obviously we only have kind of year-to-date data. This is about, I think their information was through September. They're still processing October numbers, but the total LO count that they show is 276,000, 188,000 doing 3 or more loans. But here's the really interesting data point out of all of that is the top 10%. And this has been true in the industry for a long time, but the top 10% are doing 50% of the units and about 57% of the actual volume. And so when you really start to slice it and dice it, it's that top tier of loan officers that is doing the lion's share of the volume. So pretty interesting stuff. But as volume has started to decline, the loan officer population has declined, but not as steeply as the decline in volume, which tells you that some loan officers are kind of hanging in there, even though they're not certainly originating as much at all, certainly as people were in the last couple of years. But originators are hanging in there, kind of trying to get through this, this winter season, so to speak, and just kind of sticking around to look to what the next year is going to bring.
That's great. Obviously, some segmentation in terms of production and who's helping drive the market forward, and some folks hanging on. What is the makeup of the LO community? You talked about production, but what does the makeup of the community look like?
Yeah, well, right now, there was some data that came out actually from MGIC where they said that about half of the originators out there have 21 years or more of experience in the industry. So we have a lot of people with a lot of tenure in the mortgage industry right now. Interestingly, 67% are aged 50 or older. Not that there's anything wrong with being aged 50 or older, mind you, because I am in that age group myself. But that's a pretty heavy percentage, and we've seen that for a long time. Average age of a loan officer being 54, 55. It still stands true, but 67% 50 plus in the industry. So that's just a little snapshot of the demographics there.
Wow. And given the way that the market is evolving, how do you think that both the numbers and sort of the makeup of the community, what that will look like in the next 1 to 3 years? How do you think it'll change or stay the same?
It's definitely going to continue changing. I mean, right now, I think one of just the real truths right now in the industry is not every loan officer or company that is in business right now is going to be in business in a month or 6 months or a year, right? I mean, that's just reality. We've already seen some exits from the business. So I believe what we're going to see happen is I do think that age is going to become younger. We've been 50 plus, pretty heavy 50 plus for a long time. I don't know if the average is going to come below 50 in the next 1 to 3 years, but I definitely see the average age is going to become a lot younger. Ingenious also has a really interesting piece of their data where they talk about arrivals and departures, kind of into and out of the mortgage industry. And they're seeing a higher number of kind of these loan officers appearing that they are leaving the industry and or retiring. In fact, Jeff Walton, CEO of Ingenious, mentioned the other day that he had an Uber driver who said, "Oh yeah, I was a loan officer." It's like,
Wow.
yeah. So there certainly is a lot of shifting in the industry right now, which nobody on this call is going to find that as a surprise. But I definitely see the average age of a loan officer coming down, and I also think we're going to start to see a lot more of a drive to efficiencies as well, where loan officers, will be able to do kind of a little bit more per loan officer, maybe even more so than we saw a few years ago, as more of the technologies. People are kind of turning back to their technologies. Loan officers really embracing the efficiencies that allow them to be effective 24/7. So
that's great. Jeff Walton always has some great insights to share, and they're great partners of ours over at Ingenious. So I think that he's provided some data for our discussion. Where do you think LOs will be added? Where are you seeing LOs added in today's market, or where do you think they'll be added? Not necessarily the profile or the makeup of someone who enters the industry, but in what parts of our industry do you think they'll be added?
Well, there's a couple things. I mean, I think, you can look at it the other way too, as far as like, where are they going to be cut? So certainly I think the bottom 50% of loan officers are not, not that they're being cut, but they're not as highly in, demand. People are looking for, that top 50%, which is closing, I think the top 50% is closing 85% of the volume, something like that. And so when people are, wanting to add people to, to their organization, they are looking. That's part of why they're digging into the data, is they want to find out who really is a top producer, not a refi top producer for the last couple of years, but who are the folks who are in that solid percentage, the top 50%, who can survive in a purchase market. The other thing that, we're seeing a lot of is a focus on hiring multicultural LOs or LOs that are doing business in diverse markets. There's been, with all the exciting headlines out there. There's been a lot of headlines out there about fines and enforcement actions of CFPB and the Department of Justice about redlining, disparate or discriminatory lending practices. And so I think IMBs are getting a lot more focused on those underserved markets. Banks are as well, and kind of figuring out how do they go deeper into those markets, community lending, their CRA efforts. And so I'm definitely seeing a big shift towards people paying a lot more attention, paying a lot of attention to that. So people want solid producers, but also putting a big emphasis on serving the underserved.
Oh, that's great. And it's the ability for all different types of housing and all different types of needs within the market, and it's something that's so important to our country as well as to our industry. So appreciate the context that you provided on the LO talent pool. Maybe we'll change gears and move on to the next part of our discussion, which is the mindset of an LO. Now that we have an understanding of how production works, what the LO community looks like, so you've engaged with and worked with many top producers over the years. Maybe we'll start with what's common across those top producers.
Yeah, it is interesting. And I this is my 32nd year actually in the mortgage industry, and I used to be a producer. And so, so I definitely have a unique purview into the mind of a loan officer. But yeah, having had the opportunity to talk to a lot of people, a lot of producers at all levels. So what I see as being very consistent across the people who are top producers, regardless of the market, are a couple of things. You know, number one, they've set really clear goals, and they're working in an environment that helps them get very clear goals set and then provides the accountability to set those goals. And some of this is true of people that are just at the top of their game, you know, in whatever it is that they do. It's not just top producers in the mortgage industry, but just people who are top of their game generally have those things as well. What I see top producers have done, even throughout the refinance market, is investing in relationships. I think you've seen there certainly are loan officers that kind of pulled away from some of their referral partnerships with real estate agents and maybe financial planners and things like that, in favor of, you know, they're standing in a money machine, you know, during the refinance years, but they really let those relationships drift. And so the top producers know the value of those relationships for the long haul, and they have been investing in those relationships. I also see in top producers a willingness to continue learning, just continuous learning. Again, in these the last couple of years, there are people who didn't really invest too much into learning what's happening out there, what's new out there, what kind of technologies are in place, what is my technology partners like Total Expert, you know, bringing to me to make my business better. You know, unfortunately, sometimes the people that are in that bottom 50% weren't paying as much attention to you know, some of the new tools that are out there. And so there's that willingness to continually learn and invest in themselves. And I think probably one of the more important things, there's a quote out there, Charles Darwin talked about how it's not the strongest or the most well-equipped, you know, who survive, but it's those who are the most adaptable to change, right? And those who are the most adaptable to change are the ones who are going to survive. And we're in a, you know, we're in a survival market right now. And so I do think that there is a willingness or an adaptability to change, and you have to have that, or you're simply just not going to survive right now. And a lot of it is mindset, right? It is having, you know, grit. It's having consistency. It's having some optimism, and being able to execute. You know, being able to consistently execute against the goals that you put in place. And so having that clear goal, keeping accountability to it, but then ensuring that you're actually taking the actions that you need in order to succeed.
That's great. I think you gave us a lot of tried and true things, and you teased out a lot of things that are what the evolution of how a productive LO is thinking. Are there specific things that you've seen within top producers within their mindset that have changed over the last 5 years, whether it's how they think about referral partners, how they think about technology? What is it within sort of the evolution of their mindset?
Yeah, I think there's been a lot more I think just leaning into the technology has been a big change. There's been, I feel like it's a little bit of, it's passe now to say, oh no, I don't need technology. It's the loan officers who will lean into the technology, embrace the technology, continuously learning about the technology and then executing on it. Those are the loan officers who are setting themselves apart. And you see it in every single company, every single one that I go talk to. The top producers are the ones that are like, just, up to their armpits, embracing technology, learning, figuring out how they can harness that to work for them. It's like I said earlier, I heard a top producer say, I can't work 24/7, but my technology can. All right. So I need to harness that technology to ensure that I can have, scalability and have that human interaction at the right times because the right things are being teed up to me by technology. I do think that the market over the last couple of years definitely created a little bit of what I've called refinance muscle memory, where people kind of change their process and we're like, hey, it's just about slam and jam, get them through as quick as you can. And a refinance is a very different type of transaction than a purchase market. And so I think I'm seeing top producers really hopefully didn't go away from it, but a lot of them return to really remembering that a purchase is a very different kind of transaction emotionally. It's a life event generally that's happening for a customer. I mean, anybody who's listening to this, if you've purchased a home, it is emotional. A refinance is kind of more up here. It's like, okay, we're going to save, not that it's not emotionally gratifying to save a few $100s a month or many $100s a month. But when you're talking about your family's moving, maybe there's a life event, a job change, maybe you're moving across the country, you're an empty nester, there's a life event that's happening. And so I think there's an evolution of wanting to know about those life events, pay attention to them, and then serve that customer in that way across that, across that customer journey. And, one other thing, I don't know if this is related more to how I've seen things change or how I'm watching them change kind of in real time is, the market changed really fast. Right. I mean, we kind of knew we were like going up this hill and there's all this volume and you kind of expect, like you did in years past, that we're like, okay, we'll go down the hill and that'll be a bummer, but we'll walk down the hill. Instead, we got to the top of the hill and then there was like a cliff that we dropped off because it happened like that. There's just never been a change that was that dramatic. So just like falling off a cliff would hurt, there is kind of a dusting off that people are needing to do, and people are tired, right? I mean, I think we've got a lot of leaders on this call today, and I think there's an acknowledgement for both just leaders and loan officers. It's like people just ran a marathon for the last few years, barely had time to shower or talk to your family. It's like you ran a marathon and there's a pack of wolves waiting at the finish line to chase you some more. And now it's a little scary because you're not sure, what's happening. And so I do think that one of the things that I'm encouraging top producers to do is while they're executing and doing the right things in their business, they also have to take care of themselves, right? People haven't taken care of their own health, their own finances, their relationships, and that is absolutely foundational to doing really well in your business. Is you've got to have your own house in order.
Yeah. So what I really loved about kind of the multiple points that you made through there, it's about longevity, whether it's learning a new skill and adopting technology, whether it's taking a step back to reflect, whether it's, investing in relationships outside of a refinance market. One of the big themes I heard from you is like, I'm thinking about this long term, I'm thinking about this holistically, and that's what's so critical. In addition to, and also being mindful of what's happening in the market and being able to pivot. And that's about creating a business for the long term. So I love a lot of those things sort of tied back into that longevity theme and a long-term view with clear goals that they're focused on.
Yep.
So we'll get into the nuts and bolts here, probably what a lot of folks are keen to learn about, which is what's the blueprint to retain top loan officers. So maybe I'll start with, what are the things that you're seeing innovative lenders do to keep their top LOs in the market as it evolves?
Yeah, a couple things I would think about right away is that, and as we talk about recruiting and retention, it's just two sides of the same coin, right? So I think it's always really smart to be very honest with yourself that your top people that work for you, those top loan officers, those top producers, if I said to you, think of like your top 3 producers, there's 3 names that just came into your mind. Absolutely know for sure those people's phones are ringing off the hook right now. So as you're trying to retain them, somebody else is trying to recruit them, and make sure that that is guiding your actions. Not that you should be in a panic, but you got to know those people are getting phone calls just like you're calling other people's top producers as well. So in terms of retention, number one, it's starting with that mindset of just knowing if you want to retain, you've got to appreciate the fact that other people are coming after them. Communication is one of the biggest things, and it's although it sounds a little trite, what I definitely have heard from a lot of lenders is that they acknowledge that, when the pandemic first started, oh, there was so much communication. Everybody's doing like, oh, we're going to do, weekly videos, and we're going to do like daily little calls, and we're going to send out all these things. Everybody was like, oh, we're all in it together. And then as the volume just went crazy, people really dropped. A lot of leaders dropped out of doing some of those regular communications and almost felt like, oh, people are so busy, I'm just going to give them a break, right? But it's a time to shore up if you're a leader and really pay attention to what does it look like to be a producer at your company from that producer's point of view. What does that employee journey look like, that loan officer journey to work at your company? We talk a lot about the customer journey, but I think the customer journey is never going to be better than your employee journey is, right? You'll never see a company where it's an amazing customer experience, but it's not a very good employee experience. And so when you think about those loan officers, those folks on the front line, what does that really look like? So communication is a huge part of it. Encourage leaders to really sit down and map out, what does it look like? What am I doing every week, every month, every quarter? With my managers, what are they doing? What does that actually look like? And you don't have to get crazy with it. Get Post-it notes and a big, wall, and just map out what does that journey look like, and look for where those gaps are, because that is sometimes where you'll lose people, where they just haven't had that connection with you where they were looking for it. Culture is also just, it's really huge. I definitely heard from Ingenious and from Model Match that they said, the lip service around culture is kind of overdone. There's been a lot of lip service, but the culture has to translate for a loan officer into higher production, ease of doing business, and kind of a long-term approach. And I encourage people to show your culture. Don't tell. Don't make it lip service and just something that you talk about, but literally something that you are, something that you're showing, and you're showing how it ties to actually making their lives better.
Love it. And so I think you gave us some great core foundational things that they need to do. Are there specific things that you've seen evolve in this market in terms of strategies to retain LOs that maybe you didn't see in other markets?
Yes, yeah, there's particularly surrounding technology. I've had some really interesting conversations with leaders about what they're doing, because I think the reality is that, a lot of leaders were frustrated that, oh, these loan officers aren't adopting technology, they're not using it, they're not, doing these things. But you kind of have to take a beat and say, okay, again, people barely had time to, shower and brush their teeth in the last, those crazy years. And so I'm seeing a lot of lenders right now putting attention around pulling people back in and helping them really understand all of the amazing things that they have to offer. I recently did a webinar for a great lender who's in fact a total expert customer, and it was really cool. I was, listening to them talk about, the unbelievable array of things. I mean, these folks had, everything, including total expert, that they need in order to be successful. But so many of the loan officers were like, wow, I forgot we had that. I didn't even know this thing did that. And so I think there is, that's a big deal, is leaning into what's there and really bringing it out to your loan officers, and not getting frustrated with, well, we've sent this out before, we've given this to them before, they weren't interested, they're interested now. And it's just like with the consumer. They say you have to tell people something 9 times before they actually have heard it. And being a parent, I can say that I think it's more like 10. But people need to get a message 9 times before it really sticks. And so don't be frustrated if people haven't been listening. They were busy. If they still didn't listen because you've mentioned it, talk about it again. I've seen lenders starting to really pull their people in and ensure that they know the great things that are being offered at their company. And I also believe a big shift that I've seen is helping people get automation in place. That this is, just a huge thing that I talk to lender leaders about all the time, is it's not about logins. It's not about like, oh, well, they're not logging in. Well, when I was a loan officer, I didn't want to log into anything. I wanted just, the magic to happen for me. And so I think when you can put, you're working with technology partners like Total Expert, and you're putting automation in place to make their lives easier and teeing up those opportunities for the loan officer to take action on, that's probably the best retention strategy that I can think of, is really showcasing that you're a partner in their success, and you are putting the tools and the strategies and the systems in place to ensure that they're delivering a great journey and a great way to connect with their customers and their referral partners. So whether it's evaluating or re-evaluating the technology that's there, putting that automation in place to make their lives easier, those are some of the biggest shifts that I've seen as the market's changed over the last year.
I love all the things you share with us. The only thing I will disagree with is for children, telling them 10 times. My 8-year-old, you have to tell her at least 11 or 12. But
Right?
all jokes aside, I think it is a lot for a lot of our customers. I know it's reminding them of all the things that they have that kind of got overlooked during the pandemic, and then how you help drive deal flow. I mean, that's one of the biggest things that we've heard as well. I don't know if you want to comment on it's, while it might be innovative ways to do it through technology, it still comes back to the foundation of what LOs want in some cases, which is deal flow on a day-to-day basis. So you have innovation strategies, but many of them that we've seen come to the front have been around innovation to drive deal flow. Is that, you think that?
Absolutely right. Because
Okay.
that's what's suffering right now. I mean, there used to be, again, kind of a pipe hooked up and money flowing through it. And so everything is about deal flow right now. And whether it is, capturing that initial lead or finding out where the opportunities are in that database. I think that's one of the biggest things that I've also heard lenders talk a lot about is we have so much data, right? There's a lot of data out there, but you have to take that data and gain what the insights are and turn it into action. Because the data doesn't matter if you're not doing anything with it. Even the insights, don't matter if you don't do anything with it. It all boils down to what actions are you going to take? How are you going to advise people? And it is the things. I was reading a study by FICO recently where they were talking about the number of people who want advice, they want guidance, and I think sometimes they're not getting it from their financial institutions. And I think that loan officers and lenders have such an incredible opportunity on the 1003 that's taken. They're sharing so much financial information, and you are actually there during a life event and a life experience with them. We should be stepping into that space and saying, hey, what else can I advise you on? I'm seeing, this in your financial situation. It's almost like a crime not to do that when you have all of this data. But that's the magic, is utilizing the technology that takes all of that data, raises up those insights so that you know where are the best opportunities, and then taking action on it. That's the magic.
Yeah, absolutely. And we've heard that over and over again too, which is the importance of, now there's not no opportunities that are right in front of them. There also is a focus on nurturing opportunities for the long term, whether it's around equity or referral partners, and using automation to do that has been one of the strategies that sort of come to the forefront through co-marketing, through intelligent automation. So thanks
Right
for
on.
sharing it. Thanks for sharing that perspective. The last question I have in this section for you, Sue, is the focus on relationships and building great relationships with LOs has come to the forefront as there's more of a war of talent at the current moment. But what are the it's a good moment for lenders to stop and think about their strategy to build relationships with LOs. What are the tried and true things that they should be doing if it's a refinance market in a few years, right? Refi market, or if it's a purchase market, what are the tried and true things? If there's anything else you want to add to maybe some of the things you called
Yeah,
out?
I think in terms of retaining your top talent, you certainly have to be, as everybody knows, you've got to be competitive, with the rates and the products and so forth. However, that is not what it's about. That is not what it's about. Unless you are out of the market, that is not why loan officers are moving, from one company to another. It is not about like, oh, well, I can get like a eighth of a whatever, better over here. That is not why people leave. It is about, it is about your support that you're giving. What loan officers say is they want you to, give real support, and then, get out of the way and let them do what they need to do. And so I think, again, a lot of it comes back to relationship, and it comes back to communication, because people are people, and people do business with people. People don't work with just a brand. There's no consumers out there that are just saying, hey, I just want to, go work with generic brand X. That's not how it works. They actually connect with a person, about their mortgage. That's how they, nobody's just, going out generically. And I think loan officers are the same way. And in fact, we'll talk about this a little bit more as we talk about recruiting. But in most cases, there's some kind of personal or human connection that is drawing them away to another company. And so you've got to make sure that that personal or human connection is also with you. People in the mortgage industry, particularly frontline loan officers, people don't go into being a loan officer if you are not at some level a person that cares about people and cares about relationship and cares about connection, right? And it's interesting. I'll tell you, Ryan, I brought my younger brother into the mortgage business, and he's still in the mortgage industry. And he and I are very different people, right? Our personalities are completely different from each other. He's much more kind of an engineering, brain, and I was much more like, I wanted to be out there talking to people. And while we were a great team, I'm not originating anymore. He is a fantastic originator because he still has that heart for people. And so I think when we talk about what's tried and true, it's like any relationship is, you do have to show up, you do have to communicate, you have to listen, you have to pay attention to that journey, not what it looks like from your standpoint as a leader that you're dealing with all these things, but you can't forget about what does it feel like for that loan officer, and think about how can you connect with them at scale? How are you ensuring that you are, you and your, the leaders under you are connecting with them in a meaningful way? Because for originators, it's the main reason why they make a change. Is it's not because, oh, somebody offers, this particular product and we don't, they'll stick it out with you if they've got a personal relationship with you.
Love it. Love it. Some great advice there. So thanks for sharing those sound bites. Okay, on to the last section. And initially when we started moving through this, it was like, okay, this is the time we're going to talk about going on the offensive. And when we talked more and more, we talked about how it's both, right? Your comment about your top three are being that you're trying to hold on to, they're also being recruited. So maybe we'll start with the question of what are lenders doing to recruit top LOs? What are some of the things that you're seeing in the market?
Yeah, well, I think one of the biggest things I'm seeing is that people are relying on data from companies like Ingenious. So, and part of that is not just looking at like, oh, how have things been for you in the last year or 6 months? It's really going back to what would be considered a normal market and saying, well, how are you actually producing in 2019? Not just, what have you been doing lately? And so I'm seeing much more of a trend towards people paying a lot of attention to data to find out what their production looks like, but also what their referral partner relationship looks like. When you're in a purchase market, you have to know, like real life, what's the depth and breadth of their referral partnerships. And today you can get that kind of data. And so I think that's been a big shift, is with more of that information available. That's a pretty big strategy where people can start. The other thing too, Ryan, is having information like that allows people to go into a recruiting situation knowledgeable. I mean, I remember being, recruited back in the day as an originator, and when people would call me and not know anything about me, I mean, now it was a couple of years ago, there wasn't this depth of data available, but it's like you could have Googled me. You could know something about me before you call. It's almost offensive to a loan officer if you call and you don't know anything about them. And so really warm strategy to call makes somebody feel special. If it's, you let them know, man, I've done a little research. It looks like you're really killing it in this area, very impressive. I mean, that tells that right out of the gates is going to make them feel good. It's going to make them feel special, and it's going to give you a lot more credibility.
Oh, that's great. What are, on that note, you talked in the previous section about that human connection. There's some form of bond or relationship that's built, and then them also doing their homework in the initial outreach. Those are two things that an LO is looking for in a new potential lender that they would move to. What are other things that top producers are looking for if they were going to make a switch?
Yeah, a couple of things. Like, I got some information from Model Match where they said, um, they did say that 67% of originators were influenced by an established relationship. And that's why I say on the retention side, make sure you're that established relationship, because it means that they've got a connection elsewhere, and it's not a one person sport. Again, wrapping that person up with a lot of connection. And so as you're recruiting somebody, what that also means is the more connections you can have with that originator, the better of a chance you have to land them. So it's not just a recruiter's reaching out, maybe it's a recruiter and a branch manager and maybe another top producer or loan officer from that branch reaching out. Those are going to be some of the keys to success. I also hear now from originators. In fact, I very recently, spent time with a top originator who was contemplating change, and was asking for some advice on this. And one of the top things that this individual was sharing was how incredibly important the technology stack was. That was not like an afterthought. That was one of the top things that this person was looking for themselves and their team, was ensuring that there was a modern technology stack that was going to support their business, provide them efficiencies. And those are the kind of things that I think just can't be understated or can't be overstated to a loan officer, is really showcasing the strength of your tech stack. It's and how the pieces play together, and showcasing that, hey, these are the things that we've invested in. This is how our loan officers have been successful, and letting people know too. I mean, most of the modern technologies allow for there to be, it's not just a cookie cutter. It allows it to be, they may have something particular in their journey that they want to ensure is in place. Most technologies are going to allow them to, yes, that element of this journey is going to work in this technology stack. And so having a really robust tech stack and showing end to end, showing that you're modern, because it's not just about where you're at right now. That showcases that you're thinking about the future and you're thinking about innovation, because a loan officer wants to be there for the long haul as well. They don't like moving. It's very disruptive for a loan officer and their pipeline and their database and their relationships, but showing that you're not just, good right now, but that you're good for the long haul. So the technology stack, I think, is incredibly important. And I think another thing that I know originators judge really heavily in the recruiting process is the communications that you're providing, because you are basically showcasing what they can expect. It's in fact, when they're being recruited, you're on your best behavior. It's like you're dating. This is the best communication that you're going to get. And very often, Model Match shared that was one of the biggest things that they heard from loan officers that were thinking about a move and didn't end up making a move, was because the company didn't communicate well. And that made them nervous about, like, well, if you're not communicating well with me, how is this going to work for my transactions, for my customers, for my referral partners, or once I'm actually in, what is this going to look like? So those are, just know that those loan officers they're judging you during that recruiting process. They're judging your follow-up, they're judging your communications, they're judging your professionalism. And so it's really important to ensure that you are on point with your data, your messaging, and your communication when you're recruiting.
That was a great segue to my next question, because I think you already started to answer it, which is, what mistakes do you see lenders making? You talked about the communication, and you're still dating. What are some of the other things that you see are problematic that lenders are doing when they're trying to recruit top LO?
Yeah, again, probably the number one thing is not setting the next action. Like if you're calling and you're talking to somebody, you need to have a clear next action or next step or next call with that person. You would never take a lead into your system and just be like, well, who knows what'll happen? Maybe they'll call us back someday. I mean, you wouldn't do that with a lead for a purchase transaction. So you shouldn't do that with somebody that is on your radar as a recruit. And so ensure that every single call you are moving that along, setting that next best action. I think I've also, there's a lot of talk now about signing bonuses. Some companies are giving big signing bonuses, and I'm not here to pass judgment on whether that's a good idea or not. Stratmore, by the way, had a really good piece that my colleague Jim Cameron wrote about signing bonuses. And so just if you go out to the Stratmore Group website, you can find that piece. Anybody can read it, but talking about signing bonuses and some of the ups and downs. But I do think I have heard stories of lenders offering signing bonuses without enough due diligence about, you know, or having a clawback in it or having something. And so those can be very painful when you're putting a big signing bonus out there without enough due diligence about what their, you know, what their success has been. And I think, you know, the other thing that I've heard is that I think lenders, the perception that loan officers have had, and again, I heard this from, you know, folks that were thinking about making a move and didn't, is that the people that they talk to would kind of product dump on them, and oh, we have this, we have this, we have this. And while that can seem, you know, really important, I think it just underscores again how important that human connection is, that it's not just about, you know, do you have these products? I think there's an assumption that if you don't have great products and great rates and great service, you're not really in the game, right? And anybody can say that, anybody can give lip service to that, but that's not going to be the thing that ultimately is going to be the game changer that somebody's going to come join your company. And so you can't, you know, don't product dump, but find out ask better questions, ask what's important to that person, ask about their life, do research about their life. You know, we now have the ability like that to find out more than we should probably know about people just from their social media. And so taking some time to make that human connection, that is generally the difference maker. You know, the human connection, the follow-up, and of course having, you know, the product services and rates and so forth that are competitive. That's what I've seen be the winning combination.
That's great. And I think some of the things that you just laid out are common for a LO who's evaluating a potential lender.
Yep.
Not just rates and points and that sort of thing, but the culture. But what are some of the mistakes that you haven't mentioned that you see LOs making when they're considering a switch, or if they've made a switch?
Yeah, I mean, I think again, a lot of it is around, you know, the due diligence. Sometimes people will grab at, you know, like, oh, I'm going to get this bonus or, you know, something like that. But it's really paying attention to, again, top producers don't move like that. Top producers are doing their due diligence and they're finding out, here's, you know, this is my, you know, technology stack and, you know, this is what I'm going to need. And ensuring that, you know, the right things are in place for them to be successful, and making those connections and asking enough questions. And so, you know, I think loan officers, the reason why people are saying right now, for example, that this is a you know, peak season for recruiting, it's always peak season for recruiting, it feels like, but right now is when things slow down naturally. They've slowed down anyways because of the change in interest rates, but things always slow down around the holidays and they don't start to pick back up until you get a little bit further into the year. And, you know, we don't know exactly what's going to happen with rates. A lot of prediction rates may come, you know, down a little bit. But again, I would just say, you know, loan officers not talking it all the way through, not doing enough due diligence, not talking to enough people. And so as a leader listening to this, it's why I make that recommendation about have other people in your organization talk to this loan officer, not just one person. Allowing that loan officer to make connections and start to feel like, oh, I could see myself as a part of this organization is really important.
Absolutely. I know we are into our time here a bit, and I want to make sure that our listeners have a chance to ask some questions as well. But Sue, before we get into that, I just want to say a quick thank you for, as always, your amazing insights. And I'm sure our listeners have gotten a tremendous amount of value of the direction that you've given them, and hopefully some great strategies to go back and keep their top talent and find some new great top talent. So I'm actually going to just a quick look in the chat here at questions that might have come up.
Yeah, I can't see the chat, so you'll have to tell me what's in there.
One question that we have is, how can we help LOs fight the doom and gloom headlines from the press?
Boy, that's true. You know, there's a saying that I love by Winston Churchill where he says, when you're going through hell, keep going. Like, don't stop in the middle, you know, keep going to the other side. But I think this is where this is where, again, leadership and that human connection shows up. And there's a lot of reasons to find opportunity right now. There is reason for optimism, quite honestly. Now, I'm an eternal optimist, to be sure, but when we look at what's going ahead, a lot of experts that I've listened to are absolutely predicting that interest rates are going to come down, potentially with a 5 handle. I've heard some people say by the end of the year. I don't know if I buy that one, but as we head early into next year. So part of what we're having happen right now, and I think these are important data points for leaders to be bringing out to their loan officers, is that we finally do have some folks who've been on the sidelines as far as home buyers go, who are able to actually come into the market now, right? Where they just couldn't do it before. Even at that low interest rate, if it's a first time home buyer, or some of these trickier deals, nobody was paying attention to them, or they can't get involved in something where it's multiple offers, bid $100,000 over list, only taking cash offers. There's so many people that are like, I can't play that game. Well, there's a lot of people now to serve that are coming off the sidelines, coming into the market, and there's a lot of education that's needed. I think that's another great opportunity. And to me, while people can, see all these headlines and, get depressed, and the reality is, not everybody's going to make it, right? Not every loan officer, not every company is going to make it. But I do know that every single lender that's on this call can, right? So it's reiterating that with the loan officers. I know there's still going to be hundreds of thousands of loan officers that are going to be successful, and many, many companies that are going to be successful. And it is about execution. So I think it's, remembering that we've been through tough times in this industry before. This one feels painful because of that cliff that we dropped off. But the great companies, the companies that we think of in the mortgage industry as being the great companies, and the people that we know of as being the great originators, were forged and founded in markets like this. Not in the great markets where, everything's a heyday, everybody's a genius when the market is incredible and interest rates are 2 something, right? But it's in markets like this where the foundations were laid, market share was gained, technology was implemented, that actually was the game-changing difference to grab that market share, to bring in their loan officers, retain them and bring in some more. And I'm seeing it happen in the marketplace right now. You're seeing this happen in real time. But I do think you can't underestimate that human element, and staying connected to those loan officers in the way that I talked about.
Yeah, one of the things that I wanted to call out in that, Sue, is just this idea of the importance of finding opportunity in the market, and also you have the press who has their headlines. It might be, there's a force with that, but there's a real opportunity to educate and advise customers in this market. There's tons of customers, borrowers who have equity in their home, and they need to tap into that equity. But there's an education that's needed. And for us, what we hear at Total Expert over and over again is that it's very difficult in some cases for a loan officer to do that at scale. So how do you automate the education process and then overlay human interaction, i.e. the loan officer, at the right time? So can you talk maybe a little bit about what you're seeing as a follow-up? The importance of education in today's market, and the role technology plays in education.
Absolutely, because that is one of the most important things that financial consumers in general are raising their hands and saying, is that they want more financial education. But to your point, how do we know who to educate and what to educate them about? And so that's where I do think things like, Total Expert has the customer intelligence, which that's what it's all about. We were talking earlier about having data, getting the insights, and then being able to take action. There are customers right now, if you're listening to this, there are customers right now in your loan officer's database that are wishing that someone would call them and help them understand, right, how they could actually, maybe they do want to move and they're not sure where to start, because there's people that think, I made a payment late 2 years ago, I probably can't qualify for a mortgage. Freddie Mac actually did this incredible study that showed that an enormous percentage of people still think that you need 20% down in order to buy a house, which you don't. Lots of people don't even understand how much equity that they do have in their home that they might be able to tap into. So there's so many opportunities out there that this is exactly what leaders can be doing right now. Is when you talked about a little earlier about deal flow and raising up those opportunities, even if it's not an opportunity today, it's the next opportunity that you're going to get if you are the one that's reaching out, because you've seen, you kind of have this x-ray vision into your database and you're able to see where those opportunities lie. At least if you're the one who is raising them up, you're going to be the one that gets that referral, that repeat business. Even just making phone calls to your database right now, somebody that you even closed a transaction for a year ago, what a great call to make, to be able to say congratulations on that unbelievable interest rate. Tell me about what's going on in your world. Wow, we're thinking about buying a place in Florida. Awesome, let's talk about that. Really, you lend in Florida? Absolutely, I can help you. I mean, again, sometimes it's just making that connection. Very often we don't have, because we don't ask, and putting ourselves in that position to offer that advice that customers are looking for. They're hungry for advice. They're hungry for education. They're hungry for that connection, and we should be the people doing it. I'm very passionate about the topic of financial literacy, because it is sad and shocking to me. And I would see it over and over again in my mortgage business, that people graduate from high school and they might, they had all these required classes, but none of it was about finance. And loan officers and the mortgage industry are the ones that are able to actually, think about the amazing power there to educate people about their own financial lives, and about their equity, about their home, about their opportunities that they might have. What an amazing thing to be able to do. So yes, that is a huge thing, to be able to, if you're investing in technology, you're able to see what's out there, serve those customers. That's what we love about the mortgage business, is it's helping get people into homes, helping make their lives better. That's a pretty big deal.
Yeah, and one of the things that, just adding on to what you said, is that we recognize that there's usually 11 transactions in the course of a borrower's lifetime, and they want to be educated all throughout, but especially during those milestones. And so one of the things that we've heard in terms of LO retention is being able to identify those milestones,
Yes.
those grief events, and then be able to educate and engage someone during that time. And then if maybe they're not ready to talk to an LO, but they want to start to learn about the value of a cash out refi, something along those lines. So that's
Yeah,
a trend that we're saying. What's
there's
that?
people paying cash for houses right now that would
Yeah.
probably benefit by getting a mortgage, even at today's interest rates, right? Or there's a lot of opportunity out there.
Yeah. So maybe I'll close with this question. We have a few in the chat, Sue, that we'll follow up individually, because I think that they're probably not suited for the broader audience. But what are some of the emerging digital strategies that loan officers are, customer engagement strategies that loan officers are kind of keeping a pulse on, but maybe haven't fully adopted yet, that lenders should be mindful of?
Yeah, the two things that I would say are automation, and then related to data. And so I know we keep kind of touching on this piece, but I just think it can't be, again, I don't know how much more I can underscore this, how important that it is with the amount of data that we have in the mortgage industry, and the amount of data that we capture about our customers. It is so incredibly important to be paying attention to that. And so the technology that is able to, number one, identify those life events like you were talking about, and find out where those life events and experiences happening. It's not always super linear. People are a bit messy. It's like life happens not always in the right order. And so knowing when those life events are and being able to be there. One of the reasons this is so important, I meant to say this a moment ago, is that I think we think in the mortgage industry that people will always think of us, but reality land, customers sometimes, I think if you did a purchase transaction for someone, they don't necessarily know, unless we tell them 9 or 10 or 11 times, Ryan, that we are actually the ones that we would work with them again. Sometimes they think, well, if you're the one that did that was your job, and they don't think about the fact that no, this is actually how we do business. And so I think showing up during those times and proactively being there when we know a life event is happening, and being able to educate and advise when those things are happening, and taking that action to reach out to that consumer. That's where I'm really seeing a lot of conversation, because think about the amount of data that this industry has gained. I mean, that is, think about all the transactions that were done over the last several years. Man, if you didn't have a database before, you've got a hell of a database now. And so doing something with that that's what I'm hearing people talk about is when I'm, talking about some of the emerging technologies, it's the ones that are going to, serve up those insights and enable an action, most importantly, to let that consumer know that, you're there and you're paying attention. So, I mean, I think it's around that, it's around engagement, it's around, I think, kind of the intelligence. I think there's still like some old school, like, I'm going to send 5 things, to you, whether it's relevant to you or not, and then we stop sending things. But it's the ability to have, instead of MapQuest, we're having, Google Maps or Waze, where, we know you opened this, so you're interested in this, we know you clicked on this, and so now we're going to send this. That's, again, it's kind of an expectation for today's consumer, is that you should know something about me. And it's become almost, I think, for a lot of the generations coming up, if you're not behaving in that way, it seems, almost offensive, because it's like everything else around me, I just have to think about a pair of shoes and here it shows up in my feed. You certainly expect, your loan officer, if you shared a lot of information, you have a lot of information about me, there's kind of an expectation that hopefully you'll be showing up at the right times. But I do think that the consumers need to be reminded of that we are there to help in those situations. And sometimes, even if it's not a transaction for the loan officer, I do think that there's referrals to be made as well, right? If you've got a great, you see somebody that has, is in a financial situation where maybe it's a referral to a financial planner, that you work with. I mean, there's just a lot of opportunity, but to be that hub. People talk about having customers for life, but if you want a customer for life, it does mean that you have to talk to them during their life about their life, not just about, this time during the transaction. You do have to take broader actions if you want to have that long-term, real customer for life relationship.
Amen. Thank you, Sue, for your thoughts on that. I think the folks on the line will definitely have some great takeaways in terms of recruiting and retaining top talent, and hopefully we level set what's going on in the market for them as well. The powers that be are telling me that we should wrap up, even though I feel like you and I could go another hour or two. It's been an absolute pleasure having you on the Expert Solutions webinar, and we really hope that you'll come back sometime soon. I wanted to thank all of our viewers, and a recording of this webinar and a link will be sent out shortly after. But thank you for joining us. Sue, thanks again.
Thank you. Thanks, everybody.
And we'll talk to everyone soon. See you on the next episode.